Hey guys, it's Tuesday, May 20th of 2025. I want to talk about something that's been on my mind lately. Gold. There's something coming on the horizon that's starting to concern me. To set the record straight, though, I am a physical owner of gold. I've got gold and silver in my portfolio. So for all of the gold critics and fanboys out there, yeah, I am one of you. But that doesn't mean I'm blind to the risks ahead. This video is for anyone who believes gold will just keep skyrocketing to the moon, whether you're a hardcore gold bug or someone just dipping their toes into precious metals. I'm going to share some insight using Gann theory, and if you're not familiar with it, this might not be for you. But if you're into time-based analysis like I am, stick around. A word of caution for gold bugs. Now, let me be clear. I'm not selling my gold. I'm holding it long term, passing it down to my kids and letting them decide what they want to do with it. That's my long-term thesis on gold. But right now, something about the market is bothering me. I want to show you some trends using data going back to 1969 that highlights some risks that I think we should all be paying attention to. Here's the setup. I'm not concerned about the short-term fluctuations. Sure, you can apply various techniques to predict the future, but I'm focusing on the bigger picture, especially what's happening since 2001 low of 255 per ounce. That's where I'm putting my analysis to work. Understanding the data. Let me walk you through the chart I'm looking at. The data is split by years on the top and months on the bottom. Green means bullish, red is bearish, and yellow signals consolidation, meaning sideways action or no clear trend. The market moves in phases, and we're in a phase right now that could be tricky. We had some consolidation, and while it's not necessarily a bad sign, it could go either way. Here's the thing. Gann's theory suggests we need to pay attention to specific time frames, especially the 7-year and the 10-year mark. If you've seen my analysis on the uranium spot price, you know I've pointed out how these time frames can trigger major moves. For gold, I'm especially focused on the 10-year and 7-year cycles. The 10-year cycle, a major red flag. According to Gann, we should be watching closely at the 10-year and 20-year marks. Right now, gold has been in a bullish trend for about 10.5 years, just a little over Gann's 10-year threshold. This is where things start to get interesting. I'm not saying that the cycle is going to end exactly on the 10-year mark, but we're getting close. In fact, if you look at the price action since the high in September 2011, we've been hovering around the 7-year mark as well. Another Gann's point of interest. If we calculate the time since gold 2011 high, we're nearing the 7-year and 10-year anniversaries, which means we should start being more vigilant. And that's what I want to highlight here. Be cautious as we approach these time frames. It's not about being exact with numbers, but about understanding that we are in the ballpark of these cycles. Important dates to watch. By applying Gann's 7-year and 10-year timeframes to the current data, there are 2 critical dates to keep an eye on. August 18, 2025, that's the 7-year cycle, and December 5th of 2025, that's the 10-year cycle. These are dates when both cycles culminate, and we've already seen a significant high of 3,500 in gold on April 22nd of 2025. So can this be the top? It's possible, and it's a good idea to start considering a correction or sideways movement after these dates. The 24-year cycle, longer-term concerns. On top of the 7-year and 10-year cycles, we're also getting close to the 24-year mark from the low of 2001 low. Gann's theory suggests we should pay attention to the 20-year, and we're now in a phase where that time frame is starting to matter. We're just over 24 years from the 2001 low, which also adds another layer of caution. What does this mean for gold investors? As I see it, we need to be very careful as we approach late 2025 into early 2026. I'm not saying gold's run is over, but the risk of a major correction is higher than usual. If you're a gold bug, you should be tightening your stops, managing risk, and getting ready for potential volatility. This doesn't mean sell your gold, but it does mean watch these dates closely. Now, of course, I could be wrong. Gann's theory isn't foolproof, and I'm not claiming to have a crystal ball. But from my analysis, I'm seeing clear signs that this bull market could be nearing its peak. If gold pushes past 3,500 and keeps running, we could easily see it hit 4,000 to 4,200 before any major correction. Final thoughts. My goal here isn't to be right or wrong. It's to help you understand that now is a good time to be cautious. If you're following Gann's method, these time cycles are important to watch. But ultimately, it's your money. Do what's best for your portfolio. I'll likely do another video on the geometry side of things, which should confirm a lot of what I've discussed here. But for now, just keep an eye on these dates and time frames, stay smart, stay vigilant, and I'll keep you posted with any further thoughts on gold. Thanks for watching.